All right, guys. We are here today. It's Tuesday. Again, it's a boring week, but we got Jerome Powell later on today, so that'll make it a little bit more exciting. Powell speaks at 1:15 market time. So we'll see what that looks like. Let me get some different music here. Hold on. Let me scroll a little down here. I'm gonna go all the way to the end of this playlist. This playlist is days old that I'll listen to on stream, or not days old. It's days long. I mean to say. I've been making this playlist for years. It's just so long, man. It takes a long time to scroll to the end of it. They should do like a reverse option where I could kind of put it in reverse and listen to it, but that's all right. There we go. There's some old music. All right, so SPY is down a little bit day to day. It's at 503s. Nvidia at 850, so it didn't break. It didn't end up breaking 900. Didn't end up holding. Today we got Bank of America earnings dropping very soon. So Bank of America earnings drop. We got Johnson & Johnson earnings that might be out right now. We'll have to pull up a chart and see. Hold up. It's Tesla week. Ooh, Tesla at 150s. Yeah, that ain't looking good. Yeah, Tesla is looking weak, honestly. All right, so we have UnitedHealth already out. Let me put those numbers up. Johnson & Johnson posted better than expected EPS. Missed revenue, though. Revenue came in lower than expected. They raised their dividend, though, so revenue came in at 21.383. They expected 21.4, so a little bit under expected for revenue. Adjusted EPS came in at 271 for Johnson & Johnson. They expected 264, so slightly better than expected. But this is a miss, I would say. They're probably going to be reacting negatively to this unless their raised divvy is going to benefit. Let's put the chart up here. So here's J&J. I'm assuming they're gapping down from this because this is most like a company missing revenues big, right? Like regardless of what EPS shows up, generally companies react in that way where if they miss revenue, they're going down most likely, right? So revenue, I would say, is the arguably more important one. We should have Morgan Stanley today as well sometime. Yeah, I mean, Drew, listen, man, isolating one company, every company's not going to universally do well, right? Like every company's not going to universally do well. Isolating one company, which is Tesla, and then using that as the argument for the job market struggling, like we're about to hit a recession or depression, is just not accurate, right? Like, again, it's just not accurate. And typically it follows from like getting too wrapped up in whatever. Overall, the easier way to look at it, if you're kind of just learning about economics, Drew, is that you look at the jobs numbers. You know what I mean? You can look at Tesla, right? But you look at the payroll numbers to see what jobs are doing. You look at unemployment. Unemployment objectively low. Jobs numbers have been objectively high, right? And so that's the labor market. We can isolate Tesla and look at Tesla. Tesla's, there's a lot of nuance behind it. Like Tesla is down mostly because driving a Tesla is not an exclusive looking thing anymore. Like I see a Tesla every time I step outside now. And I've been saying this for years, right? Like every time I walk outside, I see a Tesla. So it's just not as cool as it used to be. And I think that's a problem for Elon and Tesla, Yeah, I mean, again, like, look, I'm not going to argue this early. It's a little bit too early to argue. What I will say is that you have to look at the actual job numbers, not one company's layoff news, you know? And again, especially Tesla. I think Tesla's a different thing versus most of the other companies right now. Tesla, again, it's something in which the Cybertruck recently started, and so it's going to take a while. It's not easy to get right now either. Number two, Tesla is just saturated. There's just so many Teslas out there that it makes sense that Tesla's going to lay off some people and try to get better margins. I think they grew too big too quickly. And yeah, I'm not surprised. Tesla, yeah. What do you think about silver? Thanks. I think silver mostly follows gold long term. You know, I think silver mostly follows gold long term. It's a good inflation hedge long term. Short term, it can be volatile. Yeah, we're looking at some stuff, but again, usually I watch gold a little bit more, you know. Yeah, I know the data's faked. You know, again, it is what it is. You know, like typically people who are wrong, they just kind of say things are faked. Um, Silver rip off today. Do you think it'll consolidate? Yeah, March had 3.8% unemployment. That's pretty low, you know. Again, if you look at the unemployment graph, right? Like, for those that say, "Oh, we're in a recession," again, I think I really do truly believe it's mostly from people who get wrapped up in like politics, right? Like, if you're really political, you might want the current administration to look bad, right? And I don't really care about either side of the spectrum, right? But you know, when you look at the actual unemployment rate, which is like a gauge on jobs, like here's where we were for the 2010s. Most of the 2010s we were here, right? Unemployment was going down after 2008 spiking. You know, when 2008 happened, it spiked to 10%. Throughout the 2010s, we were mostly trying to get that under control. During 2020, it spiked, you know, all the way up to 15% in 2020. And then now it has since come back down, you know, mostly through quantitative easing, through bringing interest rates down. You know, these are all things that have allowed businesses to thrive. And, yeah, you know, that's helped. Been chopping back and forth for the last like few years really for unemployment. So, I mean, unemployment's not super high. And it's easy to say, like, you know, if you want something to happen, it's easy to say, oh, well, the numbers are wrong. It's kind of like AMC community saying, hey, you know, it would have gone up, but manipulation, you know. I don't know. I think we got to just look at what the numbers are. And, yeah. Yeah, Powell speaks at 1 o'clock today. My name is John Saeed. Yeah, that might be true, the real, you know. But I think, hey, look, the easiest thing you could do is look around your general area as well. Like most of the people I know aren't having a hard time finding jobs right now. I just don't think it's hard to find jobs right now. Yeah. Yeah, I just don't think it's too hard to find jobs. And again, I don't think we could say, like, again, you have to look at what the Fed wants, right? Like, outside of, like, oh, election year, they want to keep interest rates down or whatever. You got to look at what the Fed wants, right? The Fed's still in a period of quantitative tightening. They're still in a period of where they are keeping interest rates high, right? If unemployment was super high and, like, we were at risk for a recession or depression, the Fed wouldn't want to keep interest rates high, right? Some of the people pushing for this are just people who, another reason for it is like they want interest rates to go down, right? Maybe they work in mortgages, maybe they work in real estate, and they want interest rates to go down, and so because they want interest rates to go down, one of the things that will trigger interest rates going down faster is recessions and depressions. So, like, if they really want interest rates to go down, they say, oh, we're in a recession or depression, we should drop interest rates. But I don't think we should. I think we should still keep interest rates pretty high right now. I think jobs are strong, payrolls are high, and we can argue that they're not really high or whatever it is, but we got to look at the data, I think, Yeah. Tesla breached support. Yeah, Tesla down to 150s right now. Which is interesting because, like, a few years ago when companies would report layoffs, they would actually go up because of better margins, I guess. Like, they're going to save money laying people off. Not too long ago, Meta announced layoffs. They ripped up from it. Apple announced layoffs. They ripped up from it. And so it's interesting to see Tesla fall so far down from this. It's interesting for sure. So 158.20s right now for Tesla. 158.20s. Again, down under 150s. 150 is going to be a big milestone level. 150 is going to be a big milestone level. Let me check X and look at what X says. Yeah, so again, I'm looking at Twitter. My ADD kicks in on Twitter. All right. GameStop is looking for hardworking operators with experience in retail and supply chain for a job in Dallas. Bro, I wouldn't work at GameStop if they paid me $100K a year. I'm just not working at GameStop. Again, I've heard GameStop has a very bad corporate culture, All right. Jack Ma, man. Jack Ma's not the CEO of Alibaba anymore, is he? Where's Bob at nowadays, anyway? Bob is down. I'm flat on it. It's okay. Yeah, again, I find it truly ironic that the GameStop community will pump up GameStop, which is like a terrible corporate culture. Like they are using GameStop as the poster, like as the poster boy for, let's you know let's protest against bad corporate environments. Let's pump up GameStop. One of the worst ones. It's kind of like pumping up J.P. Morgan Chase to protest against big banks, right? Like, why would you ever do that? Like, but again, people don't understand. Yeah, I'm looking at the Cybertruck. Somebody put a chrome mirror on a Cybertruck. A Tesla manager who was let go today described Elon Musk to me as a pigeon CEO. He comes in, poops all over us, and leaves. Oh no, the Rockies brought in their best pitcher as a pinch runner, who then immediately, upon attempting to run, fell down and broke his arm. Yeah, so again, we got a bunch of big earnings that are releasing right now, chat. Like right now, we got UnitedHealth Group just came out with their earnings here. They posted 691, expected 661, so better than expected EPS revenue of 99.8 billion. They expected 99.26 billion. Fiscal year EPS view of 27 to 28. They expected 27.5, so better than expected guidance. Quarter one medical care ratio 84.3%. And United Healthcare just released, they should be gapping up on this. Yeah, they're up to 475. So UNH, rip it up. The healthcare sector, move it up. Markets are almost green today on this news. So United Health is out. Bank of America just posted as well. Adjusted EPS of 83 cents. They expected 77 cents. Revenue of 25.82. They expected 25.4. So better than expected everywhere here for Bank of America. Wait, let me put this up on screen. Sorry, I accidentally pasted it in this window. Oops. Yeah, so Bank of America here, BAC, gap it up a little bit, pull it back some. Here's Bank of America's numbers. So again, here's Bank of America. United Health is out as well. We'll put that number out in chat also. UNH on the right, Bank of America on the left. We got the Nvidia chart in the middle. Cohen said he's looking for engineers, cloud, Java, and web experience. Well, I've got web experience, but not like that. I ain't about to get hired by GameStop. If you got locked in a sub 3% 30-year mortgage, you are a legend, they say. Rory McIlroy is allegedly joining Live Golf for $850 million plus ownership stake in the league. Oh, bro, I'm joining too then, dude. I mean, I can't play golf, but like, we got the PGL or whatever it is for golf. I don't even know golf like that. I know Live is like a league from Saudi Arabia that came out over the last few years, and everybody's like throwing a temper tantrum about them, like they can't be around or whatever. But like, they're coming out throwing out big bonuses to players, like big bonuses to players, right? Like, again, they're paying this dude almost $1 billion to join their league plus ownership stake. Crazy. I can't even get mad. Like, listen, $1 billion, bro, dude. Like, of course he's joining. You know, that oil money, bro. I'm telling you. You know. Hey, that's solid, TV. Yeah, Bank of America's out. Look at UnitedHealth. Bank of America's down now, down to 35.20s. Look at UnitedHealth, guys, at 476s. There's the UNHs. TSM earnings will be fun. Again, we got Powell speaking again today, chat. We do have Powell speaking again today. All right, so again, earnings out today. We had bank earnings released, Johnson & Johnson. We still got a couple other. We had UnitedHealth is out, Bank of America, Johnson & Johnson. Morgan Stanley's supposed to drop at 7:30. That's the next big one coming out today is Morgan Stanley. UnitedHealth, again, reported good earnings. They're up. Bank of America reported mixed results. Good numbers, better than expected EPS and revenue, but they're down a little bit from it. Nvidia still at 850s over the VWAP, still trying to hold. The next rate decision happens May 1st, so in about 2 weeks. What does the market consider lately? Just flat period, sort of no gains. Yeah, I mean, Nvidia's sideways. Things are pretty sideways and choppy. My portfolio is down 25% past 2 weeks. Well, what are you trading, bro? 25%, you've got to be trading way too large of size. If you're down 25% in a couple weeks, dude, what are you doing? Like, I've got a pretty reasonable portfolio. I'm definitely not down 20%, dude. That's a lot. That's a lot. Y'all be careful, man. Seriously, y'all be careful. Don't trade too big, man. A lot of people are just straight gambling, you know. Like, you don't need to gamble. Just trade small, guys. Clint Eastwood, man. He's 93. All right, chat. Tesla at 158. So again, the question is it time to buy the dip on Tesla? I don't know. I really don't know yet. I don't think so, personally. I'm in Tesla, but I took some profit on it a couple days ago, and now we're down a little bit, but still very green on this account. Mara and Riot, the halving's coming up on Saturday, right? So Mara, Riot are mining stocks. They might be directly influenced by they might be directly influenced by the halving. Are you covering bank earnings? Yeah, I mean, we've already covered most of them. I mean, Bank of America came out mixed. Bank of America actually came out better than expected EPS, 83 cents versus 77 cents. Revenue of 25.8 versus 25.4. So better than expected both. Still down, though. Really kind of flat. UnitedHealth did really well. Good guidance for UnitedHealth. So UnitedHealth had good guidance. They are up to 476. We also have Morgan Stanley dropping at about 730. So miners are all down over 50%. Are they really? Yeah. But I mean, those are from highs of the year. So, you know, and the halving's coming up. So it's not a surprise they're losing some value, I think, to be honest. I think it'll make the whole industry stronger afterwards, though, you know. So today is Black Friday's anniversary. If you don't know what Black Friday is, right? So 13 years ago today, U.S. poker sites were originally allowed to run without restriction. You know, you had PokerStars, Full Tilt, Ultimate Bet, so forth and so on, right? And this was when the first online poker boom happened, really in the early 2000s. And so when poker as an industry grew, you know, one of the big reasons poker grew in the U.S. is a guy named Chris Moneymaker. His last name's literally Moneymaker, right? Is his name, Chris Moneymaker. He won what's called what's it called? When you, man, I gotta look it up. I know what it's called, I just can't think of it right now. Satellite. He won a satellite tournament, right? So yeah, that's what it is, satellite. He won a satellite tournament, winning a ticket to the World Series of Poker, right? So if you don't know poker, the World Series of Poker is the largest poker tournament in the world, right? The main event specifically is the biggest poker tournament in the world. Right nowadays, the first place prize is about $12 million if you win the WSOP main event. It costs $10,000 to enter, so it costs $10K to enter. There's thousands of people. And the first number one player wins about 12 million. Yeah, it's anywhere between like 8 and 12 minutes. It varies depending on the entries. But anyways, Chris Moneymaker won a satellite. He won a satellite, meaning he won a tournament that gave him a ticket to the main event. So he won a tournament, and because he won that tournament, he won a ticket to the main event. So he didn't win money. He won a ticket to the main event. So where he got the main event for free, he got in for 10K. And then he went and won the main event through a satellite, right? That sparked this big poker boom in the US. Anyways, these poker sites were originally allowed to run without restriction. 13 years ago today, the Department of Justice stepped in and seized all their assets, you know. Yeah. It's called Black Friday. U.S. poker's never been the same, basically. And it's such a ridiculous rule, right? Like, it's such a ridiculous rule. Like, let people do... Like, people are going to do it regardless of whether you make it legal or not. They really are. You might as well give a U.S. site the income, right? Like, it's a silly rule, you know? The rule that still keeps poker illegal is a rule that says that you can't wire money through phone lines that was created back in like the 70s for sports betting specifically. Yet, you know, a lot of sports betting is legal now, and this is still illegal based off of that one rule. Again, casinos are paying lobbyists to keep it illegal so that people go to the actual casinos. Are you expecting good data for building permanent housing started? It's not really going to make influence over markets, I'll say. Not really like that. So yeah, it's not really going to have a big influence over markets, I think, you know. Specifically building permits and housing starts. We're covering it, but yeah. Dude, the WNBA contracts are horrible. The greatest player in college basketball history just got an entry-level project manager salary. Yeah, so look at this contract, bro. So Caitlin Clark, #1 overall pick in the WNBA. She got 4 years, $338,000 for 4 years. So this year she's gonna make $76K. Next year she's gonna make $78K. In 26 she's gonna make $86,000, and in 27 she's gonna make $97,000. So she's not even gonna make $100,000 a year in the WNBA, man. That's crazy. Again, I understand it though. I really, really, really do. Really, really understand. The reason I understand this is because it's very simple. The NBA subsidizes WNBA, right? So the WNBA doesn't have the interest. It doesn't have the fan base that the regular NBA has. The regular NBA, multi-billion-dollar industry. The WNBA is subsidized by the NBA, right? So they're never going to make the same salaries that the NBA makes because, again, they just don't have as many people that want to watch it, you know? And again, I'm for them making good money. I feel for Caitlin Clark because that's not enough, but still. But yeah. Like, realistically, right now, Caitlin Clark, here's the thing that you don't see, though, right? Like, Caitlin Clark is famous. She can go to, like, bars and do, like, greetings, like, meet and greets with fans and probably make, I would say, at least a couple $100,000 a year based off of just pure, like, getting appearance fees for meet and greets and stuff like that, right? If she writes a book and then starts doing a book run, like, I think she'll be fine. She's going to make money. She's going to make hundreds of thousands of dollars a year at least, right? Based off of just who she is and how famous she is. But, in terms of her WNBA salary, it's not that much, you know. Yeah. Yeah. Are we still trading the dollar index? I'm not trading the dollar index. Yeah, she can make appearance fees, so she'll be fine. She's going to make more money than most people here, you know. And rightfully so. She's talented. Microsoft still trying to hold here. Again, a lot of stuff's pulled back. What do you think about the NASDAQ 100? The NQ? I mean, I trade the NQ daily. Today it's flat so far. Had a big downward move yesterday after, you know, let me see what the market fell. Barrick Gold is on track to achieve 24 targets. Q1 prelim gold sale volume, $910,000 an ounce. Or 910,000 ounces. Expected 967, so a little bit under expected. Again, we do have Morgan Stanley. MS is the stock. MS. So Bank of America now technically green. Nvidia up to 861. So UnitedHealth released earnings as well. Again, if we look at like the NQ or the SPY, they're down today. Slight red day, although the SPY actually is technically green on the day now. It's up to 505. Yeah, I saw the big three league. He offered her like 10 million or something like that. It's a risk though, for sure, for her floor. So like the big three, she would be playing against men, and that's a risk because, you know, I mean, yeah, that's a risk. Again, Microsoft green, Nasdaq's flat on the day, but it's starting to try to push up and go green. We're seeing a lot of resurgences in stocks in general right now. I mean, to look at the NBA, WNBA comparison, right? Revenue of WNBA is about 60 million. Revenue of the NBA is about 10 billion. Average salary in the WNBA, 102,000. Average salary in the NBA, 9.6 mil. Ticket price is about $94 in the US, or US dollars. WNBA about 47. Highest paid player is Steph Curry. In the NBA, about 48 mil. Jewel Lloyd, about 228K. Average viewership is the big one. Like, the average viewership is the thing you want to understand, all right? So, in the 22 NBA Finals, they had 12.4 million people watching, right? In 2022, the WNBA had 412,000 viewers. And so, that's about how many people I get watching my stream a month. Right, and that's the 2022 viewership of the WNBA. So again, I get more people that watch beginner trading monthly than watch the WNBA as a whole in 2022. That's a daunting statistic. And again, I'm for it. I hope they make money. Like, I'm for it. They're talented. Like I let them make their money. They're definitely more talented than I am. But still, you know. Will Powell might make the market go red? He's supposed to speak on U.S. and Canada politics, or not politics, economics. Yeah, we're gonna stream it. He is gonna be doing. Let me find this. So yeah, Powell's gonna be talking about a moderate discussion with Tiff Macklem, governor of the Bank of Canada. At the Washington Forum on the Canadian Economy in Washington, D.C. So yeah, that'll be fun. Again, we'll stream that live like we always do. We'll see how it goes. Yeah, I mean, do whatever you gotta do solo. So we have housing starts and building permit data at 8:30. I don't know how much it's going to affect everything. It might affect things. We'll see. We also have Morgan Stanley earnings in about 20 minutes. Chat. Nvidia rip it up. This might drag the rest of the market up because Nvidia just hit 860s. So we do have Nvidia pushing. Bank earnings came in. Most of them are flat to green. We do have Morgan Stanley. Again, Morgan Stanley drops earnings at 7:30, I believe. So in about 20 minutes or so, they are expecting 169 EPS on 14.4 billion in revenue. Again, we'll see what happens here, but yeah. All right, guys, the NASDAQ at 17.874s. If actual is more than forecast, then what should be the trade for the gold forex pair? I don't know. Gold today is slightly red, slightly red. Most things are flat ahead of this chat. So most things are boring right now. We don't have, again, we do have Powell today. Tomorrow, I think we have nothing. We got Canadian CPI dropping. Or no, yeah. We got Canadian CPI dropping today. Tomorrow, we have nothing again. It's the boring week. We don't really have much going on this week. Next week's definitely better. Tomorrow we got the Philly Fed Index, jobless claim. Or Thursday we got Philly Fed Index, jobless claims. Coinbase app just upgraded to an advanced trading platform. Nice, man. I think they needed that too. They didn't really have any good technical platform. Yeah, so interesting. We're reading about Jerry Parker. He's an accountant. He's now worth billions. He is crowned as one of the most successful traders in history. He saw an ad in the Wall Street Journal years and years ago. It read that, this was like in the 80s, I think. It read that Richard Dennis, who's worth millions and millions of dollars, was looking to teach his trend following strategy. So Jerry applied to it, becoming one of 12 what they call turtle traders. He scored the highest on the application test to see how good of a turtle trader they would be. And so he was one of the, Richard Dennis's favorite applicants. After 2 weeks in courses, they started trading January 2nd, 1984. After 4 years of working under Dennis, he decided to leave and create his own CTA. And while trading was different, now he's changed his systems a little bit. He has 2 pieces of advice for people. And again, this is not my advice. I have no idea what I'm talking about, and I might be wildly wrong about everything I say. Do not sue me. I'm not an investment professional, and I'm not liable if you lose. Understand CFTC 4.41. We are going to start day trading pretty soon here, so understand this rule. Understand I might be wildly wrong. Understand I trade off stream. Understand hypothetical or simulated performance results may vary and have limitations, all that good stuff. Now, with that said, Jerry's 2 pieces of advice were this. Trade small. something you hear me say a lot, and follow your system. You know, he said these are the roots of most people's problems, is that they don't follow these two things, right? Very true. Honestly, most people just want to look cool, right? Like, most people have delusions of grandeur. Do you know what that means, guys? Do you know what delusions of grandeur means? What delusions of grandeur means is that most people have these dreams of like being these big, successful, profitable traders, right? And they let that bias influence them to trade in a crappy way, right? They trade way too large. They don't scale. They instead just kind of go heavy from the get-go, lose a bunch of money, and then you never see them again, right? It happens a lot. All right, guys. All right, so look at Nvidia, guys. Nvidia up to 863s. Move it up a little bit today. Let's watch 875s. Let's see if it holds. Ronda Rousey calling out the WWE for giving Logan Paul special treatment. Get the lack of awareness. Like, bro, you got special treatment, Ronda Rousey. You got special treatment, right? Like, she's just emotional, man. Just emotional. Yeah. What do you guys think? The dollar will go up or down? Yeah, Jay Powell at 115 today. Rusi is taller than you? I don't think she is. I'm like 5'11". Ronda Rousey is. Now, she's probably got more money than me. I mean, but I don't think she's taller than me. Yeah, she's 5'7". She's not taller than me. Yeah, I mean, I don't like Logan Paul either. I think he's ridiculous. But, you know, of course he got special treatment. He's really, really famous and he can bring in views, right? Like, that's why anybody gets special treatment. Is they're really, really famous, they can bring in views, of course. Oh, she will armbar me really quickly, you know. Yeah, I'll get armbarred with the quickness, dude. Let me do a poll here. I don't think I've done one today. Let's see. Does Jerome Powell help or hurt the market today? Does Jerome Powell cause bullish or bearish market action today? That's a better way to say it. All right. Let me know what you guys think there. We do have a little pullback in Nvidia here. The SPY pull it back a little bit. We'll start getting ready to day trade here. Again, in about 10 minutes, we do have Morgan Stanley earnings. And she basically tried to revamping Roddy Piper's whole persona. I really think, like, I don't know, man. I think I think Ronda Rousey's problem is that she looks at everything with an emotional view, you know? Like, she looks at everything with an emotional view. Like, anytime you're a public figure, like, you're gonna get haters, right? Like, she's gonna get haters, you know? And I think, you know, she looks at everything like it's a slight against her, and I get it, but, like, that's her problem. She's looking at everything with a slight against her. You know, like Ronda Rousey said the other day that she was the greatest fighter of all time. And that's just such a silly statement. And it's disrespectful. Like, Ronda Rousey got knocked out twice in a row, like 2 fights in a row, and then retired from the sport, right? Of course she's not the greatest of all time ever. She had no striking capabilities at all. She was mostly just a pure jiu-jitsu person. And I like jiu-jitsu. I train jiu-jitsu, right? Not nearly as good as Ronda Rousey, but I like jiu-jitsu, right? She's not the greatest, though. She's great. Not the greatest, you know. All right, guys, gold. We're going to get ready to try to day trade here again. A lot of stuff's flat. Or no, we're actually green on the day. I didn't even notice that. We are green on the day. What are we green on? Oh, we are green on UnitedHealth. I'm in UnitedHealth. Oh, dude, I just realized I bought UnitedHealth a couple days ago. You guys remember this? I bought UnitedHealth a couple days ago. Love to see it. I didn't even remember I had UnitedHealth. Chat, hey, you love to see it. I'm going to go ahead and take profit, I think, in this thing. We'll wait for another dip. But yeah, I'm going to go ahead and lock this profit in. You love to see it. Hey, we just made some money on UnitedHealth. It's helping me be green today. I didn't even know I was in it, too. All right, chat. Again, it's about 7:30 here. We do have Morgan Stanley earnings coming out at 7:30. Technically scheduled for 7:30. Again, we do have Powell later on today. Yeah, so it'll be interesting. I'm wondering if whether Powell's actually going to say anything that helps the market today, you know? Yeah, so. Yeah, definitely top 3 most unaware profitable traders in the world right now. I'm going all in on CPI 830. Canadian CPI? I mean, okay. I mean, go ahead. I mean, it's not like Canadian CPI is really going to have a big influence over the U.S. markets, though. So if you're expecting it to, you know, it's not. So you recommend waiting for 9 a.m.? I don't really recommend anything. I don't know what's going to happen. What I'm saying is that Canadian CPI is not going to be some big like market mover like that. It's just not. It's not super relevant. I mean, the market will watch it, but not in any major way that it's going to have some big influence over markets. But it's subjective to it. Like, again, how much you want to watch it is subjective. Everybody's different. You know, go ahead and watch it. I'm saying, but yeah. So Marques Brownlee, one of the biggest tech reviewers in the world, called the Humane AI pen the, quote, worst product he's ever reviewed. Yeah, but Humane, I mean, I don't know. Let him tell the truth. See, Mike Tyson posts this video of him sprinting. He's probably tired after this little 20-foot sprint, you know? Probably had to catch his breath from this 20-foot sprint. Everybody knows it. Bank of Japan should announce a rate hike hopefully next week. We hope JPY will rebound. Maybe. I think the market might rebound now from the scary drop like a weekly or something. Maybe. I mean, I don't know. Yes. Yeah, Canadian CPI is not going to be a big influence. You know. We'll see. I mean, we'll see. We'll see what happens. So U.S. Treasuries below the 50. Where's the 10-year at? The 10-year hasn't been showing up on my chart. Is there a reason for this? Why isn't the 10-year showing up on my chart? The 10-year is like, it's not showing up. Correction was overdue. Yeah, I mean, maybe. I don't know. All right, what day was Friday? Friday was the 13th. Okay, so here we are. Bro. All right. Let me check back on chat. Forex traders unite. Yeah, I'm sure oil's probably ripping up on the escalation news, right? It's up. It's down a little bit today. Yeah, I mean, we don't really have any big stuff coming out today. Like, we have some economic reports dropping, but nothing major, to be honest here. Nothing's, like, big, I'll say. All right, chat. We might day trade a little bit today. We got Bank of America. There is really no way out of this. Left my A off soft landing. I mean, what would signal that we're not in a soft landing, though? Yeah, Powell could make a big influence over the markets. Again, what could signal that we're not in a soft landing? I'm genuinely curious, right? Like, what signals we're not in a soft landing? You know? Yeah, because again, I think we're obviously not in a recession, not right now. All right, so look at Nvidia, guys, back up to 865. This is dragging the rest of the market up, really. So this is dragging the rest of the market up. You can see it. See if it continues back up, but it's trying. Chat, it's trying. Yeah, but I mean, listen, that doesn't have anything to do, Tiffany, with a recession or depression, right? Like, y'all have to understand, okay, what a recession means is too little people working, right? Too little people working and spending. That's a recession, right? The technical definition of a recession is 2 consecutive losing GDP quarters, right? Which, what does that signal? That signals too little people working and spending, right? It's hard to have a recession when you have unemployment at 3.8%. It's hard to have a recession when non-farm payrolls come out much higher than expected, when JOLTS comes out higher than expected, when, you know what I mean? Like, it's really hard to have a recession under those, guises. John, do you buy food? No, I just don't eat. I just don't eat at all. You know, I live off of water mostly. You know, I don't actually eat anything ever in the world. All right. Again, Nvidia up to 865s. 865s. Bank of Canada at 36. Yeah. Microsoft at 415. So Microsoft's running up a little bit. Tech's going up. Where's Amazon at? Again, Amazon technically green on the day. Yeah, but again, like, listen. You know, it really is something where... Okay. So, let me think about the easiest way to put this. So, okay. So, let's talk about this for a second. All right. SPY moving up. Nvidia moving up. Bank of Canada moving up. We got Morgan Stanley released earnings. I forgot to cover these, but Morgan Stanley did release their earnings. They are... Or no, they're not. Yeah, Morgan Stanley posted 202 EPS. Expected 166, revenue of 15.14. So they did much better than expected. Here, we'll put this up on screen. And here's Morgan Stanley. Doing pretty well, up to $89 a share. Rest of the market's kind of following it up on good bank earnings. SPY's moving up. The Nvidia chart's moving up to 866. Morgan Stanley's gapping up on good earnings. Anyways, okay, so let's talk about it, right? Like, the thing that people have to understand, chat, is that just because the economy... Just because there's problems, right, does not automatically mean recession, okay? What I mean by that is, like, a lot of the time you get people who don't really understand what a recession is be like, hey, well, what do you think about food prices, right? Of course, food prices are super high. They have gone up a lot since 2020. But my point is, here's the point. Is that high food prices does not signal a recession. It actually signals the opposite of a recession, which is that too much spending has occurred, right? Like, I think it's bonkers when people try to say we're in a recession right now, whenever the real problem in the market is the complete other end of the spectrum. Like, there's too much spending that's happened since the quantitative easing, the rate cuts, the low interest rates of 2020, right? There's too much spending that's occurred, and that spiked inflation. That's why inflation is high, is because too much spending has happened. You see the market react negatively to more spending as an example of this. Like yesterday, retail sales came out much higher than expected. And let me see what the SPY did. To be honest, I haven't even looked at it. You know, and eventually the market did this, right? It came all the way back down. So the market still very much fears more spending. If the market was at a point where people genuinely feared recession and depressions, the market would react really, really favorably to economic growth, like higher retail sales, like lower jobless claims numbers, like, you know, stuff like that. The market would react very positively to that because that would signal less recession risks, right? But instead, we're at the other end of that spectrum in which over the last 4 years since 2020, you know, again, what happens is, like, the Fed has a lot of different tools that they can use if there's too much spending, which is, again, the opposite of a recession and a depression. If there's too much spending, you know, again, what happened is that what stimulated this spending, what caused this spending is in 2020, we were at risk for a recession and depression. You know, unemployment was at 15%. It spiked really, really high. The Fed had to step in and bring interest rates down to almost zero. They did this through what's called quantitative easing, as well as cutting the federal funds rate directly. Like, the Fed will have a number of different things that they can do. The first reaction is usually to cut rates, just a basic rate cut, just like raising rates on the other end of that spectrum is something that the Fed will do, right? So the Fed will step in and they'll cut the federal funds rate, which is bringing short-term interest rates down. Eventually that trickles into long-term rates. They'll also do a more desperate thing called quantitative easing or quantitative tightening, depending on what side we're on. And again, in 2020, they did quantitative easing, which means they brought interest rates down to almost zero. And again, one of the consequences of that is spending picked up dramatically. You know, we saw spikes in all spending universally in the the consequence of that spending was inflation. Inflation went up to almost 9%. And so again, when inflation spikes, and when really when the Fed fears inflation, they'll take the other side of that approach, which means that we're not fearing a recession or depression. We're more so fearing too much spending, too robust job market is what the Fed describes it as, right? So then the Fed will step in and take the other side of that, which is they will raise the federal funds rate, raise short-term interest rates, try to discourage spending in that way. They will do what's called quantitative tightening, which is still what we're in right now. Right, so the Fed is still in a period of quantitative tightening when they are reducing their balance sheet, trying to keep interest rates high. Right, the reason they're trying to keep interest. Why do you think they're trying to keep interest rates high, chat? Like, just as a general question, if you think we're truly in a recession or depression right now, why do you think the Fed wants to keep interest rates high? Genuine question. I'm curious what you guys' answer to this is. Because again, the reality of it is the reason they're trying to keep interest rates high is because too much spending has occurred. And to discourage that spending means inflation goes down. And so by keeping interest rates high, people spend less, prices drop, which is the main problem. The same people that are saying we're in a recession or depression right now, if interest rates spiked even more, would say that we are, would complain about that as well, right? So again, if the Fed... Again, if the Fed brought interest rates down, here's the easiest way to put it. If the Fed brought interest rates down, right, and reacted in a way in which it showed the Fed was genuinely fearing a recession or depression, one of the consequences of that is that inflation would spike much more than it is now. Inflation would get really, really bad, right? And then the same people complaining about a recession or depression would complain about high prices and inflation spikes. So I think it's a pick your poison event right now. I think in the end, the Fed has... I think the job reports consistently have showed a lot of spending going on. GDP has been okay. And again, we can say every report is fake just to justify saying we're in a recession. But I don't know if that's necessarily like a good way to look at markets. I think that's usually just people getting kind of wrapped up in their own bias and not really wanting to look at things objectively. Again, if GDP starts to look weak, I'll be the first person to say that we're in a recession or depression. But we're just not in one right now, and the other spending's there's too many jobs, too much spending. And again, we can argue good or bad things from those jobs being high or whatever, but yeah. Here, hold on one second. All right, sorry, I had to mute the stream for a second, talk to my wife and kids. Yeah, so, again, I see a couple different questions here. Joe, again, man, listen, and it's all love. And we can agree to disagree, but it really does sound like you're putting out, like, these different buzz political, like, topics, right? Like, these are topics that are purely meant to get clicks. Like, you're talking about something that happened, Joe, 3 years ago. You know what I mean? And maybe we were in a recession then, when again, the Fed had to step in and bring interest rates down and do quantitative easing. Again, they were doing that because we were at recession risks, of course. And that took a little while to work. And so during that period, you might be able to argue that we were in a recession or depression. Not a depression, but you might be able to argue we were in a recession then. But again, these are just political arguments, right? Just political arguments. And again, what I recommend everybody do is take a step back from your political bias, right? We know, just listen, objectively, we know right now. Again, and I'm neutral. I'm not against you, okay? We know right now the right wants to make the left look as bad as possible right now because it's an election year, right? Like, that's politics 101. Same thing for the other side. The left wants to make the right look bad right now. Politics 101, right? The left wants to act like everything's great. The right wants to act like everything's just falling apart to justify electing their side, right? This is politics 101. You have to take a completely step back from that bias, right? It doesn't mean it's true, right? It doesn't mean either of those things are true, right? You have to take a step back from all of that bias and truly try to look at it objectively without a political bias. Because again, I'm not saying we weren't in a recession 3 years ago. What I'm saying is that we're certainly not in one now. You know, jobs are too strong. Jobs are too strong. The interest rates are high. The Fed is keeping interest rates high for a reason. Like, there's a reason they're doing that, you know. And I think you got to just look at that objectively. I think a lot of people get really wrapped up in it, and they end up universally kind of acting like the market's just always in this horrible spot. Those are the same people that missed out on the huge bull run that we had last year. The S&P 500 made 24% last year, and a lot of people missed out on it because their side was telling them it was worse than it is. And you see this a lot, and I think you got to just be objective. Prices don't go down, they slow down generally, Tiffany. So that's correct. They prices can slow down. It's very rare that prices literally go down, you know. So once prices are up, it's very hard to make them go back down. The best thing you could do is slow them down or kind of keep them even, close to even for a year or two to kind of catch back up with what they should be. That's the best thing that you can hope for in inflation markets, right? And that's kind of what we're in now. Prices are not going to actually go down, and so people are still kind of getting used to these prices at the grocery store. The best they can do is slow down, you know. People are struggling, and just because spending is high is irrelevant. Well, if you think spending is irrelevant to a recession prediction, then you don't know what a recession means. No offense. Small caps are a pressure cooker. Yeah, somebody's asking me to look at the Russell. What's the symbol for the Russell? I want to say is it RTG? What is it? I'm trying to think of the Russian or the Russell futures contract. What is it? RTY. Thank you, Yair. Appreciate it, brother. Yeah, the Russell's down. I don't really like small caps though. Yeah, it's RTY. Yeah, but again, wealth. The technical definition of a recession is 2 consecutive losing GDP quarters, brother. Which means spending decreases massively enough to drop GDP quarter to quarter, right? And so spending is directly, influencing whether we're in a recession or depression or not. And so if we have really high spending, it's very unlikely that we're in a recession. It's crazy that people don't understand this. Like, look, it's all good. It's all good. We're going to move on. We do have building permits and housing start data, real estate data dropping at 8:30. Yeah, well, I didn't even include what the definition was prior to that. Like, again, people had a big upset thing when we did have 2 consecutive losing GDP quarters years ago, right after 2020 and the drama that happened from the pandemic, right? Like, that certainly did happen. I'm not saying it didn't. People were upset because they said they changed the definition to include unemployment. But again, I'm not even including unemployment in my prediction. I'm looking at the technical definition of it, which is 2 consecutive losing GDP quarters, regardless of unemployment. And so, yeah, and again, we're not there either, Yeah, I'm not saying everything's all rosy, wealth. What I'm saying is that we're not in a recession. Yeah, definitely problems overseas. There's always problems, right? And again, there's 2 ends of the spectrum. One end, you got a recession problem, right? When recession problems are there, too little spending has occurred. Typically, the Fed will try to bring interest rates down to compensate for that. And when interest rates are low, when people are spending less money on mortgages and auto financing, they have more money to spend on other stuff, and businesses do as well. And thus, it stimulates spending by bringing interest rates down. If we are not at risk for a recession or depression, and in fact, too much spending has occurred, prices spike, inflation spikes, which is what we've seen over the past few years, right? And that doesn't mean everything's rosy either or necessarily good. When prices spike, inflation is high, people are in trouble because they can't afford things anymore, right? Like, that's what we're in right now, which is too much spending, too much price spikes over the last 3 years since 2020 and the Fed's decisions there. And so again, in that regard, it doesn't mean everything's great, right? People kind of, I think some like new traders, new investors use recession to just mean things are bad, right? Like just because we're not in a recession doesn't mean things are great, right? Because again, you can have other problems that occur from too much spending, which is what we're in now, which is high prices. People can't afford things because prices are so freaking high, right? And I think that's the biggest misconception I see people make. People think that just because I say we're not in a recession means everything's all rosy and fine. And that's not what I'm saying at all. What I'm saying is that spending is not a problem right now. Anyways, SPY at 506, breaking highs again. Nvidia up to 868 right now, 868. Yeah, people don't understand. Again, a lot of, What's up, Kimberly? Yeah, I know somebody here the other day was arguing with me about like government spending. Listen, I'm gonna tell you guys this, okay? There's a difference between government spending and quantitative easing. Okay, somebody was arguing with me Friday, I believe, about quantitative easing and government spending being the same thing. It's not the same thing. There's a difference between quantitative easing and spending, and debt, right? There's a difference. It's not the same thing, chat. The Dixie is leading the indexes the past couple hours. Is the Dixie dropping, I'm assuming, since the market's ripping up? Again, bank earnings helping the market right now. Yeah, the Dixie's falling since the market's pushing up right now, which is not a shock. It's not a surprise. Again, we got Powell today. Well, they could do quantitative easing and tightening hidden in the wires. That's usually a more desperate move, but but that's been something they've been doing every time we've been at macroeconomic risk over the last 30 years. They've done QE, QT to compensate for it afterwards. They did it in 2008. They did it in 2020 as well. Now Tesla's ripping down most of the day. Yeah, Tesla's still pretty red, Morgan Stanley's already out with their earnings. I'll put them up on screen. But yeah, they're already out. They already dropped. Here's Morgan Stanley right here. Powell's at 115. All right, chat. Let's put this here. Yeah, I mean the stimulus check certainly increased spending as well, right? But that was 4 years ago, you know. It's not always connected. Nothing is always there. It just varies. And people be creating fake accounts just to talk to themselves in the comment section. Y'all are weird, man. Yeah, we don't know. The question is, when are we going to cut rates? I don't know. I really don't know. I think that the later we cut rates, the better. I think inflation is still a problem, right? And if inflation's a problem, very rarely are we in a recession. You know, that's the hardest thing to get people to kind of understand, man. Again, I said it before. People tend to just be like, you know, people are struggling, we must be in a recession. No, not true. There's a difference. Like, you have to know what a recession means before you argue that we're in one. Yeah, Canadian CPI coming out as well, chat. Did I miss building permits and housing starts? I did, man, did I? Or no, never mind. I'm sorry. We didn't miss it. It's still in 30 minutes. So we got building permits, housing starts in 30 minutes. I was about to say, I looked at my TOS clock, which says it's almost 8. Yeah, I'm pretty sure he was like one of the guys that was trolling me earlier in a different account. So good day to you. Rates should not be cut. Inflation is going up where rates are now. The Fed should be increasing rates, not cutting. Yeah, I mean, I don't think we should raise rates. I don't think we should cut rates either, though. I think we should probably keep them neutral and pause for now. Again, that's just me, though. I don't know for sure. Yeah, I mean, Tiffany, while I understand that, it's also like, even if we go to the previous old school definition, right? So even if we don't look at the quote unquote new definition, we're still not in one. You know, that's the hardest thing to get people to understand. Like, you hear people kind of using political buzzword arguments, like they changed the definition of a recession. It's like, right, but even by the old definition, we're still not in one. You know, like GDP growth has been there. I appreciate the like, Tiffany. It's all good. Yeah. But even by the old definition, we're not there. Anyways, Nvidia at 867s right now. We are getting a bullish run. We did have a big dip. If we look at markets in general, chat, like if you look at the SPY, we had a big dip yesterday midday. Nvidia dipped, SPY dipped, Q dipped, everything basically pulled back. We did have some bank earnings that are helping the market right now. Retail sales came in higher than expected. The market reacted negatively to that. The old definition is 2 consecutive losing GDP quarters, right? And while we hit one, like 3 or 4 years ago, GDP growth has been there mostly each reading. You know, we have GDP next week, so next week we get GDP coming out. Again, last time we showed up at, what did we show up at last time for GDP? Let me see. So last time for GDP, again, it comes out next week. Last time it came in at 3.4%, you know, not the glaring recession that people are saying. But again, people will argue that those numbers are fake or whatever it is, but, you know. I'm the 100th like. Powell's at 115 today, chat. 115. No, it wasn't last year. It was actually it was 3 years ago, you know. Right, and so 3.4% gains in GDP doesn't actually signal it. Powell speaks at 1:15. Yeah, sorry, we're not gonna promote ourselves like that, Tiffany. Sorry. Yeah, Powell speaks at. I think it's 1:15 is actually. Big tech earnings next week. Yeah, we got Tesla earnings next week. We have Netflix earnings Thursday, right? We got Tesla earnings this week. Rivian short term, I don't know. Earnings wise today, we already had some. Most of the big ones come out. PNC is out. We had Ericsson drop. We had UnitedHealth go out. We had Bank of America, Johnson and Johnson. Let me take a picture of this. All right, so we get Bank of America, Johnson and Johnson. What else do we have? Morgan Stanley. BK. PNC. NTRS, Ericsson. What else we got? Nothing else really big, so that's fine. We'll just cover these. Yeah, we'll see what Powell says. Yeah, Powell speaks at 1:15 today, market time. Let me see. Let me take a picture of this. Alright, yeah, that's fine. Yeah, but if interest rates lower, then more people will take loans. Well, not just that, more people will spend in general if interest rates go down. So again, more people are going to spend in general with lower interest rates. It's kind of how it goes, right? So the more people that work, or the lower interest rates are, the more people spend, because they have more money to spend when interest rates are low, right? It stimulates the economy in that way. The Fed's still trying to keep interest rates high, and so that's kind of what they're doing is keeping interest rates high, trying to discourage spending, because ultimately that'll help inflation, right? Like that's the cycle of it by the Fed. Yeah, so again, in about 23 minutes, we got Canadian CPI, we have building permits and housing starts. You know, so... All right, guys. We're gonna start to day trade a little bit here. Well, this economic data is really not gonna influence things super heavy, I think, but we'll try. We lost a little bit of money yesterday, so we didn't make money yesterday. We lost a little bit, but we just bought the S&P 500. We'll see if this treats us well. This is on Apex funded account program. They give you a demo, test your skill. If you could pass the test, they fund you. If you can't pass the test, again, you probably lose more money putting the money up yourself. Most day traders lose their first couple accounts, right? So with that in mind, should you put up thousands of dollars as a day trader and probably lose it? Of course not. Most day traders lose their first few accounts. Try an Apex account first. This is I'm basically day trading the SPY price action on Apex. And there's no PDT rule. I can day trade short, buy market, buy bid, sell the ask. Just like stocks, I can't trade stocks directly, but I can day trade the SPY and Q price action and E-mini and the NASDAQ. And there's no PDT rule. This is a lot better. What they do is they give you a demo and they test your skill. The base one's only like $30 if you use my link in coupon code BT. It's like $30. They're going to give you a 25K demo. If you can make $1,500 in profit without losing $1,500 first, they fund you 25K with a 90% split as long as you can follow their rules. And again, and they pay out millions. They paid out over 25 million last month. They paid out over 100 million. So they're one of the most legit in the world. Again, and to be fair, I think most day traders lose. And so I think most day traders will lose these accounts as well. But it's simply a lot cheaper to lose this account than it is to put up thousands yourself and risk that in most day trading accounts. You're still learning how to trade under pressure. If you lose the base one, you're only out like $30. If you're good enough to pass it, you get 90% split once you're funded. So it's kind of the best of both worlds. Limited risk, but if you pass it, 90% split as long as you can follow their rules. Again, they are a sponsor. You can check out my link right here, and you can make sure to use promo BT if you want the max discount at all times. Use coupon code BT. All right, so we made a nice little dip buy here. We're just kind of playing around on the rest, but we made about $20-30 just now, just kind of scalping little baby moves. There we go. Not a bad little bounce. We'll go ahead and cut that there. Nice. Why don't you go for a swing like a week? I mean, I'm buying a lot of stuff. Again, my TOS account's got over 70K in it right now. So, you know, we buy a lot of stuff, to be honest. Like, we're just kind of hanging out. We invest, we swing trade. We bought UnitedHealth a couple days ago and caught the rip this morning. Sold the rest of our position this morning after this huge bounce. So we swing trade. So building permits and housing starts are at 8:30. Bitcoin, yeah. Bitcoin at 63,000. Bitcoin's down a lot heading into the halving. Morgan Stanley up, Bank of America. I think, I don't know if Bank of America's up or not. Bank of America is almost completely flat. UnitedHealth did really well, though. That's kind of helping pull the markets up, specifically the S&P. Look at this bounce. So we call it the bounce level. Pal's at 1. Yeah, dude, I'm the biggest paper-handed trader in the world right now. Chat. Again, I am terrible. I have no idea what I'm talking about. Don't copy me. Not an investment professional. We did catch that bounce, though, so we were right about that bounce. And we are green in this account. People can say whatever they want, but, like, we are green in this account. So. Yeah. So we got this big rip. We'll see if we hold now. All right, so we do have this little mini pullback. We'll buy this dip, add into it. We'll get into maybe like 5 to 6 contracts here. And just use what we made to take a longer term trade. What do you think can bring Tesla go up again? Earnings. Tesla has earnings that drop next week, next Tuesday. One of the bigger earnings reports coming soon. So, yeah, that's next week. Earnings season starts, and it's already kind of started with today, of course, and tomorrow with, or this evening, we got United Airlines and ASML, a couple other things. Thursday, we got Netflix. Next week's the big boys, though. We really do have, like, big earnings next week. So I think I'm trying to see when Amazon reports. Yeah, we'll go ahead and try to add a little bit more here and see if we get a quick little pop back. And if not, we'll just cut it. And we're mostly flat on the day. We built up a cushion and then we swing a little bit heavier into that cushion. And if it doesn't work, we're mostly flat, which is kind of where we're at now. Yeah, we're gonna have to cut it. So we're still flat. We're down like $50 on the day. Just overlay the Fed's fund rate. Well, yeah, there's obviously a yield with interest rates and bonds. There always is, you know. How does housing market affect futures? Um, yeah, I still don't think things look too bad. We usually trade the NASDAQ. Kind of chopping sideways right now. Could be worse, to be honest. Does building permits reflect inflation? Not really. Maybe a little bit. Like, we're kind of watching it like a little bit in that way, but not really. Yeah, Powell speaks again. You know, Nvidia's been in an upward trend. Yeah, we'll see what he talks about. Again, UnitedHealth just broke highs again, too, so we'll see if that drags everything else up. We did trade UnitedHealth. See if Nvidia bounces, is what it is. UnitedHealth just cracked highs. Rip it up. Microsoft now up to 415s. And see if Nvidia goes up. We're watching Nvidia closely here, chat. So we want to see if Nvidia rises and drags everything else up. But we're kind of flat here. Like, look at Nvidia right around 864s. It's had a good day. I don't think building permits and housing start data, though, is really going to influence it like that here. So I don't think it's going to really give a big influence like we think it might. Yeah, I don't know. I think with Nvidia, it depends on, like, look, okay, so like people say it's too extended, and I get it, but I think you have to look at it in terms of like revenue, right? So like, let's look at Nvidia's revenue graph here, because I think this is a really good look at like what's going on with it, what to potentially watch out for, like all this good stuff, right? Like, I think looking at Nvidia's revenue graph is one of the best things that we can look at in terms of like price. So again, let's take a look at the actual stock price here. So here's Nvidia. We'll put Nvidia on the top chart right here. So again, we're going to put Nvidia at the top chart. And take a look at it. So it's at 863s, right? Let's put a long-term chart up. So a year ago it was at 262s. All right, so a year ago it was at 262s. Nvidia revenue a year ago was, let's see, 7.19 billion, right? So 7.19 billion was Nvidia's revenue. Now its revenue is at 22 billion. So it has 3x'd since it put in these crazy big runs, right? It's 3x'd in terms of revenue. Its revenue has gone up 3 times, a little bit over that actually, but still, right? Nvidia's revenue has gone up again a little bit more than that. So we are scalping. So look, we're up about 50 bucks on the rest of this on the regular NASDAQ here. I'm gonna take some more profit off at the top. We got 3 contracts left. We're up about 120 on the day. Take a little bit more off here. We got 1 contract left. We're up about 140 on the day. A little bit, yeah, about 140. We'll go ahead and get out the rest there. So yeah, we ended up making here on the day, chat, trading off the NASDAQ mostly. We're up about $133 on the day right now. About 133 bucks, not bad. You know, here's our graph here. Our win-loss ratio is 2 to 1. We're up about 132.50. So pretty good, pretty solid. We'll keep, you know, trying to trade this. Maybe I'll put the NASDAQ. I usually trade the NASDAQ a little bit more. Yeah, but okay, so their revenue has over 3x'd, right? So again, let's look at the price from that same period of time last year, which is about 262, right? So 262 times 3.2x is about 840s. It's right around where we are now, guys. Where are we now? We're at 860s. So again, what I'm saying is that the price increase correlated with the revenue increase is about break even, right? It's about break even versus where it was at the beginning of the year versus where it is at now. Revenue has 3.2x, price has 3 point something x, right? So it's about even. It's not like revenue, Nvidia's price has skyrocketed, right? Yet its revenue has stayed the same. That's just not what it's doing. And so people arguing that Nvidia is too extended on the upside, I think that's one of the big parts they're missing about this. And I'm not saying Nvidia is not extended, Chad. I'm really not. I don't know. I'm just kind of giving you those numbers to keep in mind, because again, those numbers are important. Like they're really important. EPS wise, we could do the same thing for EPS, but yeah, it's important to look. So we are getting a dip in the E-mini now. You know, and if you look at EPS, it's going to be even better, right? So again, Nvidia's EPS, which is actual margins, right? Like these are actual profit margins, was 82 cents at the same period last year, right? 82 cents. 82 cents, right? They're currently at, so again, Nvidia's EPS is currently at 492. For this next earnings call, they're expecting what? They're expecting 513s, right? So again, let's just do 492 to keep it easy. So again, they have 6x'd. And so in terms of actual increase to their bottom line, their margins, Nvidia has 6x their EPS in a year, right? The price is only up about 3.5x. So if we're looking at EPS, again, the other side of this is that they are making much more money now. They're making much more money. Their revenue was much higher. And again, when you correlate it with the price, it's not the craziest thing, right? It's not the craziest thing. I'm not saying it's not extended on the upside or whatever. I'm just saying when you correlate revenue increases and EPS increases to the actual Nvidia price, it does correlate, right? Yeah, but I mean, again, yeah, you're not giving me an argument outside of what I just said, right? Saying it's insanely extended, and by what metric? You know, I'm not saying you're wrong. I'm curious, like, by what metric are you saying it's extended? You know, because again, we just looked at EPS and revenue increases versus previous price, and all that stuff. So, yeah, all I'm saying is the next Nvidia earnings are going to be really, really important. Really, really important. We got 5 minutes, chat. 5 minutes before building permits and housing starts data comes out. 5 minutes. We'll see the NASDAQ starting to turn. We are green on the day. We've got a nice cushion. We're up about $140, $130. All right, chat. 4 minutes. 4 minutes. Building permits, housing starts data comes out in 4 minutes. It's not a huge release, though. It really isn't. Like it might influence us some, but it's not like it's not something that's probably going to influence markets like that. So again, expected today at 1.514 million for building permits. Housing starts expected at 1.48, and we also have Canadian CPI at 8:30 as well. It's expected at 0.7% for Canadian CPI, 0.7%. So. We're going to buy this dip here. We'll take 2 contracts. We're already up a couple hundred on the day. I don't really want to hold this too long. I want to take a quick little scalp from this data, or ahead of this data release, and I'm going to try to cut it before we report. And again, we are day trading on Apex's funded account program. You can see it's very similar to day trading stocks. I'm trading the SPY price action. Like, it's the same thing as the SPY. There's just no PDT rule here. On the left side, I can day trade short in these funded account programs and limit my risk and learn to day trade. And if I'm good enough, I can get started for a very small amount of money. Again, the base one is 30 bucks. If you lose, it's not the end of the world, but if you pass it, you get 25k funding, 90% split in futures. In the futures market, you could day trade the S&P, the Nasdaq, currencies, and I don't know if you can trade currencies on Apex, but gold, you know, a lot of reasons to check it out. There's the link. All right, here we go, guys. We got 2 minutes. 2 minutes. If you do want to check them out, use promo code BT beginner trading. Get ready to cut this. I'm gonna cut this. We just got data coming out, so we're up about 100 on the day now. Not too crazy, about 110 actually. So if you look at the P&L, we're up about 110 on the day. Here's our graph. We're up about 110. Could be worse. I'll let the data report and then see if we get some good action here. All right, 1 minute, chat. 1 minute. Are we getting close to a bear market? I mean, y'all tell me, man. Look, I'll put a weekly chart up. Here's the year, 2024. You know, this is 2024 so far. You know, if you want to look at a broader, if you want to look at like a 52-week chart, here's the market over the last 52 weeks, guys. 30 seconds here, 30 seconds. This bear market is this right here. You know, so again, this is how much we're up. Again, y'all tell me if that's a bear market. I don't think it is. All right, we got 20 seconds, chat. 20 seconds. This is a little bit late, so we're gonna pause this. About 15 seconds. Hit the live button next to the play button. Get caught up. We appreciate it. We'll see what this data shows up as here. A little bounce. Here we go. And all right, so there we go. Canadian CPI showed up lower than expected, almost universally. Lower than expected Canadian CPI. It did make the market spike up a little bit. Housing starts came in lower than expected. Building permits came in lower than expected. Housing starts 1.321 million versus 1.48 million. Building permits 1.458 million versus 1.514. So lower than expected for all of Canadian CPI, as well as building permits, housing starts. So again, I would assume this is optimistic and bullish. The market is reacting a little bit here. Again, I would assume it's optimistic and bullish, but yeah. And again, there goes the bullish action. So we told you guys, again, I would assume this is optimistic. Lower inflation data is good for Canada. Building permit, 1.458 million. Housing starts, 1.321 million. So again, optimistic. Again, if we were in a recession, less economic growth would not make the market go up. You know, and again, market's pushing up. So again, we got Canadian CPI probably making the market move up is what this probably is. Canadian CPI, lower inflation data than expected. Again, month over month, 0.6 versus 0.7% for Canadian CPI. That's probably helping the market a little bit here. And we'll put all this stuff up right there. All right, so again, there's all the numbers. Again, we had Canadian CPI, we had building permits, housing starts data. All of it came out. Market ended up ripping up on this report. Look at the market bounce. Again, lower than expected building permits, lower than expected housing starts data, lower than expected Canadian CPI. Yeah, I mean, here's our CPI graph, right? So here's our CPI graph. So you can kind of see, again, 2020, Fed stepped in, brought interest rates down. Okay, so the Fed stepped in, brought interest rates down, did quantitative easing. This ended up shooting up CPI, like shooting up inflation. Inflation got up to almost 10%, 9% is what it got up to. Since then, the Fed pivoted to the other side where they brought interest rates up and they kept them high. And then since then, CPI has come way down. Since 2022, we're now consolidating here, you know, so just to give you kind of like an understanding look at what inflation has been. And again, to understand the Fed's policies here, chat, like let's give you an economics look at this, guys. And it's important to understand this, okay? A lot of people don't really one of the things that is very evident here is like a lot of people don't actually understand economics. They just understand, you know, buzzwords and arguments. But again, so Fed stepped in. This is when the economy was at risk, right? So people were talking about recession and depression. The biggest risk to that was 2020. Why? Because people stopped working. People stopped spending. Jobs dried up. The pandemic happened. You know, remote work happened. This was the biggest risk to a recession and depression. And so what the Fed did to combat that is they brought interest rates down to almost zero. If we put up the federal funds graph, right? If we put up a Fed funds graph, right? If we look at the Fed rates here since then, all right, just to give you an understanding of economics here, if we look at the Fed's rates, we put up a 5-year chart. Again, the Fed brought interest rates down to almost zero and they kept them there, right? So this is 2020. The Fed brought interest rates down to almost zero. You can see how low interest rates were. For years, they kept interest rates down, right? Because the logic is that when you keep interest rates low, people spend more. People are able to spend more when they're paying less interest. And so this stimulates the economy, stimulates spending. And that it did. Spending shot up. You know, and one of the consequences of an increased spending and jobs market is inflation problems, right? So inflation spiked up. Again, you can kind of see that in this graph. After a while, inflation spiked up to almost 9%, or over 9%, 9.1%. Again, so what the Fed did to combat that is they raised short-term interest rates. By raising short-term interest rates, you see we did rate hikes from January of 2022 all the way to July of last year. We were raising rates, right? One of the reasons the Fed does this is by raising rates, it keeps interest rates high. By keeping interest rates high, spending dries up and businesses lower prices to compensate for it. It ultimately is a measure to keep inflation, to help inflation, keeping interest rates high. And so again, the Fed has been pausing interest rates for a while now, since, you know, for almost a year. The Fed's been pausing interest rates. They haven't raised rates recently. And the question is, when do we start cutting rates? If you want to know when interest rates are going to start going down, you got to wait for the Fed to start cutting short-term interest rates and ending QT. They're doing quantitative tightening. You got to wait for them to end all that stuff. That's going to ultimately help interest rates go down, right? And again, one of the consequences of keeping interest rates high is inflation got better. You know, so again, that's the logic. I hope you guys can see the logic there of all this stuff, right? And right now we're in a period of time where the labor market has been strong, the jobs market is strong, but prices are still a little bit too high. The Fed is still not in their 2% target. They still want to hit 2% over time, and we're nowhere near that. So, you know, we still got some work to do in terms of inflation, but that's where the market currently is. I never had a code. I had a link. No, I never had a code. I don't know. Chances are we get a rate cut this year. I mean, right now, there's a chance, right? So if we look at the actual chances here, regardless of what anybody says for or against a rate cut this year, in terms of right now, probabilities-wise, we're probably going to get a cut in September, although this could always fluctuate and change. But right now, most people are expecting we get a cut in September is what we're looking like. September rate cut is on the table. All right, so market did spike on these housing starts and building permit data, as well as the Canadian CPI news. So we did spike on all this stuff, so that's good. Markets are moving up a little bit more. That's nice. UnitedHealth. With this being an election year, does that change out the normal order of economic cards we are usually dealt? Yes. Again, it kind of cancels each other out. Like, one side wants to make the current side look like it's just the worst that it could ever be, right? Which is my guess where a lot of the people that are still so like stubborn with we're in a recession, it's usually because they want one side to look the worst it could ever be during the election year, right? The other side wants to make everything look like it's great and fine and everything's all easy and good, you know? And again, I don't think we're necessarily there either. I think inflation is still a problem, right? So I don't think things are all rosy and fine either. As in most things, the true answer is somewhere in the middle, right? And again, that's kind of where I am. We're definitely not in a recession, but inflation's still a problem, and the prices are still really high, you know, and interest rates are really high, and we don't know when they're going to come back down, right? Like, that's the way you have to look at it. You know, we're not in a recession. Our problems are more on the other end of that spectrum. So, all right, chat. Market's popping up a little bit. All right, so UnitedHealth at 480s here. We got Baba at 72.5. Google at 156.19. So what's up, Connor? Microsoft at 415s here. Oh yeah, there's money to be made. There's always money to be made, man. Well, I mean, this latest spike right here correlated with economic data, Connor. You know, so like this spike right here is mostly like you can see it's right at 8:30 market time. Like, look at the time. It's 7:30 my time, but it's right at 8:30. You know, this correlated with Canadian CPI data, like Canadian inflation data coming in much lower than expected, building permits and housing starts coming in lower than expected, signaling less economic growth, but also less inflation problems, making the market optimistic. But this is mostly an economic data bounce. The rest of the market maybe could be bouncing on that stuff. Maybe an oversold dip, like you're saying, bounce, but yeah. What do you think about Tesla? It broke down. Yeah, Tesla looking weak on layoff news, right? So Tesla looking very weak. Again, maybe earnings can turn them around. We'll see. Again, Tesla back over the VWAP, though. We'll see if it actually holds. Yeah, I mean, tomatoes hidden in the wire. Again, year-over-year inflation. Common CPI for Canada came in at 2.9% versus 3.1%. Month-over-month CPI came in at 0.6% versus 0.7%. Median year-over-year CPI for Canada came in at 2.8% versus 3%. Trimmed CPI year over year for Canada came in at 3.1 versus 3.2. So what I'm showing on my graph, and again, the estimates can vary, right? So like the estimates can vary. It was mostly lower than expected, Doesn't mean things are all good and fine in Canada, but this is what the market probably reacted to. Baba up to 70.2s. We're also going to throw it in sub-only mode, so if you haven't already, subscribe, chat. We appreciate it. Let's see what else we got here, chat. We still have about an hour before market opens, so we'll see if we get anything good. How about the Conor McGregor fight, which was announced? Tesla's still number 2. Yeah, I mean, overseas. That makes sense. It's a hard market to take. Anybody else having trouble putting the 10-year yield up on TOS? I'm having trouble seeing it. Yeah, I don't know if he's going to come back better. I hope he does. People hate Conor McGregor. You have to respect him. Like, the dude's smart. Like, people get so wrapped up in the character, and some people get really emotional about the character, right? So, like, if you find yourself absolutely hating Conor, he's done his job at making you hate him, right? Like, I think most people got to respect it because, again, he does a really good job of making people want to see him get knocked out. And people buy the pay-per-view regardless of whether they like him or dislike him. So it's a smart strategy, right? The fighters that go out there and are completely, like, bland personality-wise, they don't make as much money, and then the same people that whine and complain about how much they make, where they don't sell the fights at all, right? You got to respect Conor. He sells every fight he's in. And just a smart guy, man. Like, again, I used to dislike him. Eventually, you realize that, like, he's just smart. He's selling the fight, as he should, That's why he gets paid a lot. Yeah, that leg break is rough. Again, look at the E-mini. E-mini testing highs of the day now. Same thing, Nvidia pushing up to 867s, almost 870s. Yeah, he did. Yeah, he's rich now. It's going to be hard for him to stay fighting, because he doesn't need to fight, right? Yeah, I mean, You know, Khabib still has his number though, for sure. You know what I mean? Khabib still certainly has his number, but I mean, still, you know, Conor was good. Q moving up. Q at 430s here, chat. 430s. How do you think? See the matchup between Makhachev and Khamzat versus McGregor? I think both of them will destroy McGregor. No offense, and I like Conor. Again, I just said I like Conor. He's not going to beat Khamzat or Makhachev. He might be able to beat Khamzat. He's not beating Makhachev. No. Yeah, Q's up to 430s, testing highs here. Again, it's a double top. We kind of got a similar thing yesterday. I'm not confident enough in this to make me buy the dip though. I'm just not confident enough in it yet. All right, guys. So, again, we got a little bit of a dip after testing highs on the SPY, Nvidia, E-mini here. Economic reports are out, and we're kind of boring right now. We're just not really doing too much. Yeah, I can't even get mad, Jay. I mean, when you got $100 million, it's really hard to stay motivated to do something, to fight somebody. Fighting is like a, you know, necessity is the mother of invention, right? But you can look at it in fighting terms as well. You fight if you need to fight, right? Like if you need to make money, you fight. That's what most UFC fighters do. Conor doesn't need to fight. He's richer than everybody right now for the most part in MMA, and so, you know, coming back in, he's gonna make a couple mil if he fights, but still, you know, I don't know. Again, I'm not gonna buy this. We're just kind of sitting tight waiting. Watching Nvidia here. Nvidia back up to 866. We've already made a couple hundred, or over 100 today at least. I'm gonna wait until the opening bell. We're gonna day trade live as well, chat. So again, we'll see if we get anything good. Again, building permits, housing starts data already out. We had Bank of America earnings. All right, chat. 30 minutes here, chat. 30 minutes. Double top. Still mad at Connor for gassing and gets Floyd. Yeah, but that's Floyd's MO, man. I like this dip, though. I will buy this dip now. That's a big enough dip. Definitely top 3 dippiest dips in the world right now. Let's see if we get a bounce. Four contracts. Boom. Scalping it. Took some profit. Nice little bounce. We'll take out a little bit more there. Lock that in. Up about 130 on the day now again. We got a nice little cushion that we're day trading. Yeah, we're day trading on Apex's funded account program. Again, you can see how similar it is to day trading stocks. Like you can see I'm buying market, selling market. I'm buying this dip. Watching the SPY. This is the same price action as the SPY right here. If you look at this versus this, it's the same exact thing, right? There's no PDT rule in what I'm trading though. In the futures market, you can day trade the SPY price action. No PDT restriction. The futures market is actually what most pro day traders trade. And again, there's no PDT rule here. I can learn to day trade with limited risk. Or if I don't have that much money, but I'm a good day trader, I can get started for anywhere between $25 to $30. And if I pass the test, I get $25K in funding. And again, they've paid out over $100 million to their funded traders. They fund thousands of traders. Great way to learn how to day trade. Or if you don't have that much money and you want to get started for cheap, this is a great way. It's one of the most legit in the world. They've paid out over $100 million in total, over $25 million last month. Again, if you want the max discount, though, just use my promo code BT. Beginner trading, BT, all one word, or all 2 letters, BT, beginner trading. We're up about $140 on the day now. We just cut this trade. We're up about $140 on the day now. So not bad, building up a profit in my, this is a 50K funded account is what I'm trading right now, a 50K funded account. Here's my P&L on the day, up 135 is what we're up. So not too bad, we'll take it. You know, I like the little dip here. It was a nice dip. We took the bounce. Shouldn't he hold for longer? If you're talking about me, I mean, again, if it works, I'm going to keep doing it. I'm green on this account in total. Green on the day. I mean, again, if it works, I'm going to keep doing it. Salesforce, man, it's been a while. I know they had earnings. CRM, they're down the 270s. Still bouncing up some. We got the nice little bounce. You also have to kind of keep an eye on Nvidia at 867s here. So Nvidia's trying to run too. Yeah, I mean, again, a lot of people that want to criticize me, they isolate day trading. They're like, oh, you suck at day trading. And again, I'm green in this account. But, like, it doesn't matter. Either way, we're not purely a day trading channel. Like, we do some day trading streams. We're mostly economic reports. Like, that's where we grow the most, is economic reports, earnings, economics in general, you know, CPI, PPI, Jerome Powell. We got Jerome Powell later on today. That'll be huge. So, yeah. All right, so we got another pretty big dip. We're going to buy right into this dip, I think. We'll keep 2 contracts. We'll keep this one small because it's a fast dip, so I think risk-wise it's a little bit higher. Back up to slightly green. There we go. Took half off there. We're just playing around, kind of building up a small cushion at the open. Yeah. So again, we're up 145, about 150 on the day now. That's nice. Yeah, Powell speaks at 115. SoFi. Let's see what else we got. Tuesday, PayPal. Wednesday, Pfizer, QCOM, Apple. Has Amazon confirmed when their earnings are going to be yet? What about Google? April 25th. Is it confirmed? Please don't be confirmed. Oh my gosh, so stupid, bro. I don't want Amazon earnings the same day as freaking Microsoft and Google and Snapchat and Roku and Intel. Like, why in the world are y'all putting out earnings all on the same freaking day? It's stupid. You know, it causes more volatility than necessary, and it makes it so that we can't cover each individual earnings. Now we got to choose between Microsoft, Google, and Amazon. It's so dumb, man. Yeah, first world problems for sure. Definitely first world problems. I think I'm gonna go cry in the corner about it right now. But you were lucky to take that name. The name had nothing to do with my growth, though, man. Like we got involved with the YouTube scene early. Like we were one of the first people to really start live streaming. You know, and so and we started off at penny stocks, and then we kind of gravitated towards economic data, earnings, and broad stock market stuff. We still day trade, of course, but like. It's not like the name is what helped me grow. We grew because we were early in day trading. All right, look at this dip. Again, we're going to buy into this now, too. We got 2 contracts here. 8 a.m. volatility showing up. All right, we took half off. Nice. Took another half. Just scout. In like 3 seconds, we just made about 20 something dollars. We're up 160 plus on the day. It's a conspiracy to keep the YouTubers down. That it is, bro. That it is. It's all good. Again, it'll be less work for me. And again, my channel has grown to a point where, like, to be honest, we used to really depend on these earning streams to like get good views. Nowadays, we don't, right? Like nowadays, again, we don't need these earning streams anymore as much as we did, Nowadays, we got big channels, big networks copying off of our content. But again, some of them just can't seem to be able to, get the kind of viewership that we do for some of these big ones. Again, I'm proud of my channel, man. I really am. I'm proud of my channel. You can see kind of how much we're growing. JP Morgan, PPI, 15,000 views. Fed minutes, 26,000 views. CPI, 30,000 views, basically. Payrolls, 14,000 views. Jerome Powell, 30,000. Just proud of the channel, man. Proud of the channel. We've been growing a lot, so we'll take that growth. Yeah, for sure. We put in work. We're consistent. That's why we grow, Again, a lot of people just enter it late, man. Like, a lot of people are just now trying to cover the same stuff I'm covering. And again, you got to understand, like, they're late. It's hard to grow right now. It's saturated. It's hard to grow on YouTube right now. It's certainly not as easy as it was. You know, like, again, I've had people that worked with me before. Like, I've had people that worked with me that owned, like, or that were like owned. I've had people that worked with me that branched out and started trying to stream at the same time as me covering the exact same thing. And they tried it for a while too, and they realized very quickly, like, it might look easy, you know, like we got 600 something people here. That's not a lot based off of what we normally get for our big economic streams. But they realized very quickly, like, when they tried streaming, they got like 2 people there, like 3 people there, you know, like 3 viewers. And so they realized very quickly it's not as easy as it looks, right? Like, it's not as easy. If you can get over 200 people watching a stream, you can make at least $50K a year. You know, so people have to understand, but it's hard to do. It's not easy to do. You got to be consistent. You got to put a lot of time in at first, you know. Hey, thanks, Ricardo. I appreciate it, brother. Thank you, man. Keep up the good work. Greetings from the Netherlands. What's up, Vincent? And again, my thing is, like, again, I just kind of put out free stuff. Like, we get haters that show up. Most of the haters are just miserable in their own lives. You know what I mean? Most people are truly supportive. The haters are just louder sometimes. But again, my big thing is I just want to give it away for free. I don't sell a course. Like, I would rather just tell people bluntly the truth. And sometimes that's good and bad. But, you know, I can sleep better at night telling people the truth, you know. So if I'm biased in a sponsor's favor, I'll just straight up say, hey, look, I'm biased. They pay me money, you know. We try to talk about some good stuff, too. I genuinely enjoy some of the conversations that we have here. Even if they're not market related, they're still really fun to have, to be honest. Hey, what's up, Conrad? Thanks, bro. I appreciate it. Nice, yeah. 2 years ago. Yeah, the first, like, I would say the first 10,000 subs is the hardest, Jay. First 10,000 is the hardest, you know. Yeah, we try. Again, I take the approach of I'm just going to be honest, even if it doesn't look good on my end. Like, I'm just going to be honest about it. You know. And that way nobody can ever say I'm lying, you know. I might tell the truth and be annoying about stuff, but I'm not lying, you know. And I think that's good. Yeah, the second thing you learn running a community is that people are really emotional about their own biases. A lot of egos, man. Nobody wants to admit they're wrong. Nobody, like, trading is really one of those things where people get started and very, very quickly they start acting like experts, right? The Dunning-Kruger effect really proves itself in the trading communities out there in the world because, again, people get started and very quickly they claim to just be market experts, right? Like, they might just be reading a freaking newsletter they get once a week, right? But they think because they read that one newsletter that they somehow just kind of understand the nuance and, you know, everything about the markets. And again, everything market related is super nuanced. There's a lot of correlations that are hard to see. And it really does just take a long time to really understand economics and markets and bonds and yields and stuff like that. Like, it really is very, very complex nuances behind everything, you know, and it's hard to understand. But again, trading is one of those areas. The easier way I could describe it, again, I had a guy I used to work with, and I tell this story at least once a week. But I had a guy that he was like a fan of the YouTube channel, right? He joined the Discord. He wanted to help the Discord out. And when he first joined, he said, hey guys, I'm pretty new, John. I'm very new. You've helped me learn a lot as a new trader. Thank you so much. I'm a new trader. I'm learning, you know, thanks for your help, right? So I kind of started letting him help the Discord a little bit, post in the Discord or whatever. Within a couple months, he starts telling people he makes 30 grand a day and that he's been day trading for 20 years and like all this just ridiculous stuff. And I think sometimes it gets to a point where, like, the newer the trader is, the less aware they are at how unrealistic the stuff they're putting out is, right? So if you're new and you don't really understand all this stuff, you might think that claiming to make 5% a day is a reasonable claim, right? You might think that telling people that you've got a $20,000 account and you're making 5K a day is a reasonable expectation. Like, you might not understand where the red flags, how obvious those red flags are, right? But again, trading is one of those worlds where people get involved and very quickly they want to claim to be market experts, economic professionals, and like all this different stuff. But what you realize very quickly is that most people truly don't understand the broad like scope of things in economics and trading. They really don't, right? A lot of people truly really don't understand the difference between, again, what's a bad, like when we're in a bad spot versus a recession, right? It's not the same thing. Like, we can be in a bad spot and be the opposite of a recession, which is what we're in now. And there's a lot of other examples, but very quickly you learn. And again, me as well, right? Like, I'm certainly not an expert at anything. And I always try to tell people that, like, look, I'm not an expert. In some ways I'm learning as I go here as well on this YouTube channel, right? Like, that's why I tell people I'm not a professional. Don't copy me, and I'd rather just be real and honest about it. No amount of research will tell you what big money is planning. Yeah, big money will pull traders in a lot of different ways too. Again, in 2022, right here, there was a lot of big news and big banks saying that we were going to crash here. We were going to keep going down, right? Like, retail traders ate it up and they started shaming people for going long, like just jumping on big money side. Right, and a lot of retail traders missed out on this 2023 bull run because they ended up following big money into thinking we were going to crash here and just keep going down. Then we ended up doing, again, 24% in the S&P last year. Market ended up flying up, one of the most bullish years in a long time. And who you think missed out on that? Retail traders that were mirroring big money sentiments missed out on it, right? That's where a lot of people get so emotional about things as well. Who you think made the money last year? The big banks did, of course. Like, big money did. Again, because they led people astray in other directions and they piggybacked off of that, And so you see that a lot as well. Big moves, misdirection, all this stuff in markets. It's interesting to see. Yeah, I mean, my old penny stock content was fun. We grew a lot in the AMC GameStop squeezes. We grew a lot. We grew a lot over the last few years. We kind of found our niche in the last few years, which is economic stuff. Yeah, I'm not going to talk about that, Al. Yeah. Thanks for the content. Good luck, everyone. Get in where you fit in. Always have a plan. Yeah, for sure. 100% Tobias. The longer I trade, the less I know. 100%. Yeah, those were some fun streams. I was using OBS, and we used to kind of put different overlays up. It was fun. All right, guys, we got about 20 minutes left. Again, now it's a day where we don't have any economic reports, really. Definitely top 3, Al. No, Tim Sykes? Nah, man. Listen, I'm not going to say anything negative about anybody specifically, but I think it's really easy to tell traders what they want to hear, which is that study, 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 study and it'll help you find financial freedom, that you could get started today and take $5,000 and turn it into $100K using my super secret penny stock system. Study, 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 guys. Find financial freedom. Penny stock system. I'm not here to judge. But yeah. Oh, it's like 95.5 Al, but that's pretty standard in all of trading. Yeah, again, some people got really big in the early 2000s off of newsletters, right? Like a lot of these penny stock gurus, they made all their money trading newsletter pumps in the early 2000s, right? When technology was getting adopted in trading, and they made their money off of newsletter pumps is really what it was. That kind of loophole is closed now. You can't make money like that anymore, but a lot of them made all this money from these newsletter pumps. And, you know, the market has changed so much to where you can't even do that anymore. Yet now they're selling the secrets of the game and how to get rich and find financial freedom based off of the money they made in newsletter pumps. You can't do that anymore. The market has changed so much. You can't use the same strategies you did in 2005 to make money in the market right now. You just can't. It's completely different. Not in a broad sense. You can always invest in value investing and DCAing. Those remain true. But in day trading specifically, it's wildly different right now. It's a wildly different landscape. And so some penny stock gurus are selling courses using credibility from them getting rich off of newsletters that you can't do anymore as justification to buy their system or mentorship program. You know, it's all good. I'm not here to attack anybody, you know, so it's all good. All right, so we still got a longer term bullish wedge pattern here, but Bitcoin triple top. Yeah, I mean, I think it's mostly nonsense, Nick. I think it's so difficult to make money in penny stocks, and like an example of it is like this, right? Like, let me draw an example. All right, so penny stocks will go like this and then dump, right? Some of them will go like this, of course, and it's really easy to isolate only the ones that go like this and ignore the ones that completely crash on you. The probabilities of making money in penny stocks is so freaking low. And so it's so difficult to make money. They can get halted. They can get offerings put in them. Like, they can get delisted and go to pink sheets randomly. Like, it's so incredibly difficult to really make money in penny stocks that most of that market is just propped up on mentorship programs. You know, again, really, like, if it was really easy to make that much money, you know, one of the very common sayings in trading, right? Like, this is the truth, okay? You want to know what truly makes you money? Follow the big money. right? What does big money do? One thing that big money, big hedge funds consistently avoid is pink sheets and penny stocks. If it was really that profitable, Goldman Sachs would be trading those strategies, right? The reason you don't see Goldman Sachs trading penny stocks almost ever is because it's really just kind of nonsense, to be honest, in my opinion. This is coming from somebody that used to stream penny stocks, that used to trade penny stocks, day trade them, all that stuff. It's mostly nonsense. It's mostly a fugazi, a unicorn dust. It doesn't exist. It's just there to sell you courses, is what it is, And again, new traders that want to believe that they can get rich from small accounts are the most likely to believe it because it's confirmation bias. Like, they want to believe it's true. They want to believe that they can find financial freedom, but it's mostly crap, So yeah, there seems to be an issue with 80% discount code while buying Trade-Evade accounts. I mean, I don't think you should use Trade-Evade anyway. I think you should use Rhythmic. Rhythmic is what I'm using here. It's a better platform. It's less issues overall from Trade-Evade. Trade-Evade's nice. I think Rhythmic personally is my favorite, but it's subjective. So it is subjective. So yeah, we're gonna stream Jay Powell today. Yeah, I've traded options. I'm mostly just a shares trader, though. Shares and futures is what I typically trade. +1 for Rhythmic. Yeah, Rhythmic's nice. All right, guys, we got about 11 minutes left. We don't have any other economic data today aside from Powell, and we will be streaming Jerome Powell today. We also have industrial production numbers coming out today as well. So we do have industrial production numbers coming out in about 15... Or no, wait, they're already out. I'm sorry. So industrial production numbers came out as expected, basically, here. Outside of this, we do have Powell speaking at 1:15. We will be streaming this live, of course. So again, y'all be ready. But yeah, we do have an issue, again, with 80% off discount code not working. The only inflation data, Saeed, that came out today was Canadian inflation, and it came out lower than expected. What specific reasons do you have for Rhythmic being better than Trade-Evade? I mean, it's subjective, right? It's like me saying chocolate cake is good and somebody else saying, I hate chocolate cake. Like, it's subjective, right? It's opinion-based. My main reason for liking it is because I like software-based platforms better than web-based platforms. Web-based platforms are more susceptible to, like, lag. Software is less susceptible as long as you have the internet and the memory to, sustain the platform. I just like Quant Tower a lot better than Trade-Evade. I think Quant Tower is easier. It's better charting. But again, Trade-Evade's nice. I mean, it just depends on the way you look at it, right? I think trading penny stocks is crazy. Truly investing in a company that is a penny stock. Hey, what's up, Bulldog? What's up, brother? In a penny stock is something different. It takes a lot of research, patience, and resilience. Yeah, but it's also just got to take, you have to be actually either just misled, gullible, or crazy to really invest in penny stocks like that. Because again, most penny stocks fail, right? Like, you could do the most research ever in penny stocks. Like, you could spend all day researching and find the best DD ever in the world and still mostly lose money. Because again, the marketing, the easiest way I always put this is like, the Wolf of Wall Street wasn't lying. How did Jordan Belfort sell? Like, how sleazy was he? He would sell penny stocks to people, and he would call up the quote he said was selling garbage to garbage men. All right, what he would do is he would pump up penny stocks to people. He would say, hey guys, Aerotine International, a cutting edge firm waiting imminent patent approval on radar detectors, civilian and military uses. Now, all this stuff, right? He would sell penny stocks to people, and he knew they were going to fail, right? It's the same thing you still see nowadays. Same thing. A bunch of Jordan Belfort clones out there doing the same freaking thing, man. They're selling crap to blue collar people, right? And Again, the blue collar people don't know any better. They want to find financial freedom. So they're buying the mentorship programs and the courses. Maybe they're buying actual penny stocks. And I'm not just talking about penny stocks. I'm talking about low float manipulatable stocks is what I say when I talk about penny stocks. Some of them are loving it. They're just falling for it hook, line, and sinker. They're so desperate for it to be true that they ignore red flags. Same problem with people that Jordan Belfort sold to is they were so desperate for it to be true that they ignored red flags, right? Happens a lot. Mullen's a terrible company. The problem with a lot of these companies like Mullen is that the CEOs probably know their company's failing, right? And so what do? They're siphoning money out of the company now. Instead of spending the money they make on marketing and business that would actually help the company succeed, they're kind of putting it in their pocket, right? Like this is happening a lot. Like I promise you, this is happening a lot with penny stocks, like where the CEOs don't even believe in the company themselves anymore. They're just kind of siphoning money from the company because they know it's going to go out of business. You might as well make a couple mil and let your stock fail. And so that's why like people just getting talked into spending money on penny stocks. Again, a lot of them are just kind of gullible. They're just falling for it, you know. And again, I'm here to shatter that confirmation bias, I guess. Are there any other catalysts for the market today? We got Powell speaking at 1:15 with some Canadian politician. We'll see what he does, but yeah, it's Eastern Standard Time is what it is. All right, guys, we got about 5 minutes left, 6 minutes left. I'm gonna go run to the restroom real quick. I'll be right back, guys. All right, guys, we're back. Where would you learn the red flags to know the difference? Just experience. I mean, again, you got to understand, like, most trading content in general is free out there. You don't need to spend money on a course or mentorship program, and that's where most people are going to catch new traders that are just desperate for, again, day trading is very difficult. Most people lose at day trading, and if you're struggling financially, the last thing you should do is day trade, because you're probably just going to lose more. It's going to push you in a more rough financial spot, in all honesty. Right? Like, that's the truth, right? That's the truth that nobody says, but that's the reality of it, Again, if you are going to day trade, limit your risk with a funded account program. Funded account programs are useful because if you lose them, instead of losing, again, when I got started day trading, I put up 3K, lost it very quickly. It's not an uncommon story. Most people do the exact same thing. They lose their first few accounts. Right? So the more you put up at the beginning, the more you're probably going to lose. Funded account programs are useful because they limit that risk, right? They give you a demo first and they test your skill. If you could pass the test with the demo, then they fund you with a 90% split. So once you're funded, you're keeping 90% plus, as long as you can follow their rules. If you don't get funded, you only lose what you pay for it. The base one's $30-$35. I'm in a 50K combine right here. This is like, it cost me like $40, I think, $35-$40. And so again, if you lose, your risk is limited. But if you pass it, there's no PDT in futures. You can day trade short. You get 90% split once you're funded, all that good stuff. And so it's limited risk. And day trading this is very similar to day trading stocks. There's just no PDT rule in futures. I can day trade the S&P, the NASDAQ, gold. Patterns are very similar to blue chips. Patterns are very similar to like Apple day trading patterns. There's just no PDT rule, right? It's what most people should be doing, although they are a sponsor, of course. I'm biased. Shameless plug right here. They pay me money. I'm biased, of course, guys. But again, you can check them out if you want to help support the channel here. Use my promo code BT, beginner trading BT. I think they're having a problem with, I think right now they're having a problem with Trade Evade accounts getting the 80% off. You should be able to use my coupon code at least on a Rhythmic account and get 80% off. I'm definitely top 3 most biased ever traders in the world right now. Don't invest in Aerotime? Yeah. This is the only stock channel I watch. Please pray. Hey, well, good luck, dude. It's a blessing, bro. I didn't really get my stuff together until I had kids, right? And I think people that don't have kids, I'm not judging you, but I think people without kids are very selfish-minded, right? What I mean by that is, like, if you don't have kids, when you have kids, you have to learn to like live for somebody else, right? You have to learn to, like, they're more important than you are, right? And that humbles you, I think, a massive amount. So having kids can be a beautiful thing, even if it's not necessarily good. There's the market open here, chat. There's the market open. We'll see what we get. But once I had kids, I got my life together. I straightened out. I was a screw up before I had kids, to put it bluntly, All right, chat. Still waiting here. All right, guys. We are breaking down a little bit, but watch Nvidia here. Watch the SPY pretty close. All right, Microsoft belts it up. Again, we're waiting to see if we get anything good first. We're going to let the opening bell play out here. But we do have Nvidia starting to run. SPY dipping down. Understood, have a kid. I'm not saying to have a kid. I'm saying kids can help get your mind right, And again, I think you genuinely have good people with or without kids, right? But I think kids can help motivate you to do good, I guess is the point. Yeah, oil's been pumping for the, a little bit with the macroeconomic drama. I don't know what I want to do here. I kind of want to buy the dip because we do have the previous closing price underneath me here, but I think I'm just going to wait. So, yeah, you just got to make sure you actually have the money to support them. Very flat open, Chad. Very neutral, kind of boring open. We don't really have much that looks good here, in all honesty. Should have bought the dip. There's Nvidia breaking highs. Markets are bouncing back here. Green action and a lot of stuff, to be honest. Tesla weak still. Breaking lows. Apple dipping down a little bit. Bouncing back some. Yeah, I'm not trading at all right now. I just don't trust anything here. This looks too choppy and sideways. All right, so very flat open. All right, so now we're bouncing back up a little bit. Nvidia bounced right at that VWAP 200 EMA level here. Now we're back up some. Very sideways, rangy open here, though, chat. So y'all just be careful. All right, so now Nvidia back up some. Kind of a flat opening range. I'm going to buy this now, I guess. It's risky. We're going to take 2 contracts here and just play with this. If Nvidia bounces up, which it kind of looks bullish, then we'll be in a good spot, I think. But if not, we'll be okay. It's small enough size to where we're still going to be green on the day. I'm going to cut this now, I think. Little $20 loss, so we're still very green on the day. We're up like 130 or 140 still. But, again, this is such a big red candle that we're getting out of this. Looks like it was the right move. Look at that big breakdown. Powell speaks at 115, I mean, market time. Very flat day, guys. My hands are off right now. We just don't have anything that looks good, in all honesty. Very flat, boring, choppy, neutral day. Not a lot going on. Yeah, there's the breakdown here. So again, looks like we cut at the right time. Sometimes exiting losing trades is the right move. All right, big breakdowns now. Look at this drop in the SPY here. So red action starting. Maybe we'll start to piggyback off of that. Big red action flushing through here. This has to do with not Apple, really. Apple's kind of bouncing back. Tesla looking really, really weak. Tesla down to 153. So Tesla looking really, really weak. I got out of most of my Tesla position. Although, remember, earnings are coming up. So earnings are showing up this month, chat. I'm going to buy this. I think a lot of stuff's down already. Look, one contract here, or two contracts, very small. All right, take a little bit off there, locking that in. We'll give the rest time to bounce back. Nice. All right, so we just made it 30, 35 bucks. Again, we're up about 160 on the day. All right, we're going to pivot to a short trade now. Although, look at Nvidia here. I don't know if I like that. It's like 4 contracts here. See if we continue down. Right at the previous closing price, we're flat on this trade. I got out of half of it. I want to limit my losses there. I don't want to. I'd rather just limit it to 2 contracts and be flat than Nvidia's shooting up is why we're doing that, right? So Nvidia's being very, very strong, and this could drag everything else back up. Okay, well, we just made it right back. There we go. All right, so we're up to about 170 on the day. Yeah, 175. If I would have held in that short, we would have made a little bit more, but we got to use risk management here, I think. See, look at Nvidia run, though. Nvidia's going up there. I'm going to buy this dip now again. Kind of taking both sides of this. Three contracts here. Two contracts now. Took out of most of it. Got out another contract there. Three contracts now on the upside. Oof, I gotta get out of this now. Nvidia just fell down. All right, we're up 160 on the day. Yeah, Powell's again, I don't know how much this speech is gonna impact Powell. I really don't. You know. All right, so we got a big cushion on the day, chat. We're going to try to make some money now with big size. But we need to find the right trade to do it. I don't know if this is it. All right, so again, there's the I'm watching Nvidia close. Like I wanna see what Nvidia does here. And Nvidia cracking highs, breaking over highs here, chat. But the rest of the market's up and down. I'm trying to see what it is. Had a Powell. Market's volatile, kind of going back and forth here. All right, so we just used this dip to really make some money here. So again, we're up to about 304. We risked some here with this trade for sure, but we were mostly trading the NASDAQ. Got a little nerve-wracking, but now we are up a nice 300 plus on the day. Now, I don't know what we're going to do. We're mostly trading the regular NASDAQ here. It got really volatile in this period, but yeah. Which kind of fits in the same strategy where we build up a cushion first on the day. And then if we can make a cushion, then we take larger risks once, you know, once we have that cushion, right? And so that's what we did today. We took some pretty big risks, I think maybe a little bit too much, but we are growing this account nicely. And I think that's a good risk management system, especially for new traders where you build up a cushion. Once you have that cushion, you're able to take larger risks. And that's kind of what we're in now, where we can take larger risks if we want. I think we're probably just going to sit on this profit for the rest of the day. Net-wise, we're up at least 250, 260 profit net. So that's nice. And the market's still pretty choppy. Maybe it's waiting for Jerome Powell to do something. So, we'll see how that goes. But we do have Powell later on today. That should be fun. Tesla cracked down, and now it's kind of bouncing back a little bit. We're red in equities, though, so my equities portfolio is red. Powell's at 115. Market time, chat, 115. So E-mini is down a lot. So the E-mini has broken down a good bit. We're watching Microsoft here too. We're in a buy zone right now. Yeah, I mean, we're down a lot. It just depends. Like if we're looking at Nvidia choppiness, maybe. Consolidated. Let's see if Nvidia holds over the previous closing price. All right, so we got a little bounce back up again, Nvidia. Oh my gosh, Rosie. Hey, baby, you scared me. Who's my dog, Rosie? Oh my gosh, come here. Yeah, that's a good girl. You just a good girl. Huh? Can y'all see her right here? Rosie, come here. Hey, come here, baby. Come here. Come here. Like, y'all want to see her? Here. Hey, baby. Oh, goodness. Here, look. Watch. Let me show you. Look, there she is right there. Hey, baby. That's just a good girl. I don't know if y'all can see her. Come on. Hey, stay. Stay. Okay, don't you move. Stay. Sit. Stay. Stay right there. Don't you move. There we go. This way you'll be able to see her. Hey, baby. Come here. Look. That's just a good girl. Look at her. That's just a good girl. You just a sweet baby. Aren't you? One of the best dogs I've ever had. Really genuinely a sweet, good-natured dog. That's a good girl. I gotta get a shampoo. I've spilled coffee all over this floor, so don't judge me. I got cough drop wrappers here. Genuinely one of the best dogs I've ever had. Come here. Come here. Come here. Yeah. That's a good girl. All right. Run off now. Yeah. All right, so again, Nvidia back up to 867. Nvidia chopping flat. Not really an easy day to trade here, guys. I'm not really finding much I like right now. Yeah, she's really a great dog. Great dog. And again, if you haven't already, check out Chart Prime. I'm taking a look at a different time frame than I normally do. Here's a 15-minute chart. And like, look at how impressive this is if we zoom in on today. Again, they're a sponsor of mine. I'm biased. Don't copy me. Not an investment professional. They pay me money. I'm biased. And so I can't guarantee you're going to make money. Nobody can. Not an investment professional. I'm not liable if you lose. They pay me money. I'm biased, right? But I was always kind of skeptical of algorithmic companies. Genuinely impressed. Genuinely impressed. And I can't fake what I'm showing you. Look, buy signal here. This is a 15-minute chart. Literal days of bullish action. Sell signal way up here, literally called the top. And these don't repaint. Literal days of red action. Buy signal here, literally called the bottom. A day of bullish action. Strong sell signal there. Days of drops. Buy signal recently showed up here, and you did get, it looks like, a little bit of follow through from it. Genuinely impressive. You can use these on any time frame. I can't guarantee they're going to work. You kind of got to look around and see what works on what time frame and when it works. Again, you can use this on any time frame. Anything with a symbol on TradingView, screeners, oscillators, back testers. A lot of cool stuff. It's like $40 a month. Kind of custom indicators. Really helpful if you know what you're doing. And again, you can check it out. Great way to help support the channel. It's called Chart Prime. Here's the link. Check them out. Yeah, definitely top 3 dogs of all time ever in the world. Just a great dog. Nvidia pushing up. We're at 870s right now, but look how choppy the chart is for Nvidia today. It's going up and down and up and down and up and down. I don't know if I'm loving it, chat. You know, I just don't know if I'm loving it today. I'm going to be back. I'm going to go ahead and close this down. I'll be back later. T1 settlement news means that it's only going to take a day to get your funds settled back into your account. So if you spend $1,000 in equity today, you get that $1,000 back the next day with T1 settlement. T1 is transaction plus 1 day is what it technically stands for. But yeah, we're going to be back. Powell talks later on today, guys. I will be back later on today. So be ready, be good. I'll see you guys later. Y'all be good. Again, we will be back later on today. We do have Powell speaking at 1 o'clock today, chat. It should be interesting. It should be fun. Again, if you want to check out Apex and trade with me, link is in the description for that as well. Promo code BT will get you the max discount. I'll see you guys later. Love you all. Y'all be good. Y'all be safe. I'll see you guys later.